Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Monday. In today's program, I want to discuss a couple of events which is happening this week, because this is the beginning of a brand new week, let's face it, and some implications that could mean to the market. Oh, thank you very much. Thank you very much. I hope you're well, sir, and having a great day. Thank you. Some big events coming up. But before we get into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out the way, let's get started. So this week has a major event coming up, which I think is going to be a potential real big market mover. Okay, this is why I'm calling this week Inflation Week. Inflation Week. And anyway, we have got two inflation readings. Okay, so let's go through both of them, and then I'll talk about the one in particular I think the market is going to be transfixed on this week. But let's start off Wednesday, Monday, Tuesday. Economic data-wise, is fairly light. But Wednesday, it all starts. And Wednesday is going to be a big day. First of all, we have German Consumer Price Index due on Wednesday at 6 a.m. UTC. Expectation is for it to come in at the same rate, 8.5%, same as it was previous. Obviously, there is a lot of talk about, obviously, the EU at the moment, especially with the energy crisis they have happening at the moment, especially with the gas. Was Nord Stream 1 only delivering 20% of capacity of supply because of the turbine apparently stuck because of Russian sanctions. But anyway, this is a story which is going to start developing bigger in the future, in my opinion, especially as we get closer to the winter months. So German expectation 8.5% is extremely high. Bear in mind as well is that you have the ECB at the moment, who does seem to be pretty tepid in their reaction to interest rates. So be interesting to see how that is. But unfortunately, that is totally overshadowed by something else. Which is happening on the same day. And this is the big one. And I'll tell you why this is the big one. Now, at the moment, as we all know, the market is absolutely obsessed with the Fed. And they are absolutely obsessed, the Fed this is, in bringing down inflation to their target of 2%. Now, here's the thing. They've raised interest rates quite aggressively, to fight inflation. And the market is extremely nervous that if they get more and more aggressive and carry on being aggressive, then the market won't be able to handle it and we'll slip into a big global recession. Big global recession. And don't forget, we have this ongoing debate about whether or not the US is in recession or not. Those who are in recession camp, they say, yes, we are, because of the negative 0.9% GDP reading we had 2 weeks ago. The other ones are saying we're not in recession because our labor market is far too strong. And they might have a point, because don't forget, on Friday, those of you who were kind enough to join me on Friday, we saw a shocking NFP result. Shocking. It came in at 528,000 new jobs created versus the expectation of 250,000. That number is pre-pandemic numbers. So that's how good the labor market has recovered. So yes, and this is basically fueled of the market's belief that the Fed will do another rate hike of 75 basis points because of this confidence in the labor market. In fact, the CME Group FedWatch tool now stands at 68.5% chance of a 75 basis point hike versus 29% belief a week ago because of this strong number. Which leads me to the big event happening on Wednesday, which is, of course, the US Consumer Price Index due at 12:30 p.m. Expectation for this is for the rate to come in at 8.7%, slightly lower than the previous reading of 9.1%. But if this number, despite 8.7 or even higher, the market is going to be convinced, absolutely convinced that the Fed's going to be aggressive in September. And we could see a lot of dollar strength because of this, because it's such a big event, because I really think this could be a real big market mover. I will be doing a watch along of this event. Okay, so I will be going live at 12:20 p.m. on Wednesday to cover this event because I really think this is going to be the key event this week, and the market's all going to look at it, especially with inflation across the globe at record high, at 40-year highs, 94 in the UK, US at 91 currently, 8.7 maybe. EU at 89%. This event is going to be massive, or potentially massive. So please come along and join me for that. Because like I said, I think it's all going to be about inflation this week. After that shocking NFP number, the market is going to be obsessed with the CPI number happening on Wednesday. So please come and join me for that. After that, it got slightly overshadowed, unfortunately, a Friday. Still big data, especially if you're a cable trader or sterling trader. And that is, of course, we have the UK GDP, gross domestic product, due at 6 a.m. UTC. Expectation is for it to come in slightly lower, negative 0.2%. Previously, it surprised the market, came in quite high at 0.8%. They were expecting a negative reading last time, but it came in slightly positive at 0.8. But this time around, they're expecting negative 0.2. Don't forget, the Bank of England last week scared the market. For one, saying that inflation is going to get to 13% by October, and by also saying at the same time that the UK will fall into recession by quarter four. Anyway, let's have a quick look how the market stands at the moment. Let's start off with the euro. Obviously, we had a lot of dollar strength last week on the back of NFP. It was actually trading around here before the NFP number, and then it skyrocketed all the way down to 1.01390. It has recovered slightly, currently trading now at 1.0201, but still, like I say, way below the levels it was trading at before the NFP was announced. If we have a look at the cable, the sterling dollar, again, same thing as the euro, came under an awful lot of pressure after that NFP number, currently trading 1.2063. Under that that real key area of interest of 121.976 and trading above the 1.20034. So it's range bound at the moment. The dollar yen, obviously, dollar got a lot of strength on the back of the NFP, currently trading at 134.978. 134.98. Key area of interest for this pair at the moment I'm looking at is 134.70 as a potential support. That is also where obviously we have the 50-day moving average as well. If we have a quick look at gold as well, as always, gold, again, it came under pressure after dollar strength, after the NFP, currently range bound, which I wouldn't be surprised because obviously it's catching its breath after Friday's drama, still way under now, currently trading $1,776.29, way under that key area of interest of $1,791. Have a quick look at oil. Oil managed to get a slight boost, but not that much of a boost, still range bound, under pressure. Don't forget, it's all about demand now. Supply issues are waning. It's all about the lack of demand. Don't forget, I reported last week that the EIA said they had 450,000 barrels of oil in storage, opposed to the 4.5 million barrels of oil, they had in storage, opposed to the 600,000 barrels expected. So they had a lot more in stock, indicating that demand is waning in the US. This is why oil is currently under pressure. I see a key area of interest at $89.54. So yeah, that's how the market currently stands at the moment. Dollar strength, but fairly range bound as the market catches its breath after the drama on Friday. So anyway, here we go again. Major events this week: Germany CPI, US CPI. Don't forget, I will be doing a watch along. US initial claims as well, which we'll look at. Okay, don't forget, I like looking at US initial claims, US GDP, and US Michigan sentiment. Those are all key events this week. As the market stands, FTSE currently trading slightly higher, 0.24%. DAX currently trading slightly higher, 0.49%. And Eurostoxx 50 currently trading at 0.48% higher. Don't forget, you can ask me questions anytime you wish, or simply just say hello. I mean, tell me, are you excited about the US CPI as much as I am? Because I really think, like I said, I really think the market is going to be doing nothing but talking about that this week. Because after the NFP, if you get, like I say, if you get a real high number, even if it's slightly lower than last time, don't forget the target's 2%, and there's no way going to be anywhere close to 2% at the moment, let's face it. The market is really going to react to it, and we are likely to see potentially a lot of dollar strength on that day. So it should be a real key event. So please come along and join me and tell me, what do you think about it? Do you think it's going to be as big as I think it is? Or do you think it's going to be disappointing, like sometimes some of these events can be? So there is that. Okay, if there is no questions, don't forget, if you think of a question later, you can put it in the comments below, either on YouTube or Facebook. I will see them, and I will reply to them next time I'm online. So don't worry about that. And don't forget, I'll be, of course, going back online later this afternoon at 1:30 p.m. UTC, or maybe even 2 p.m. UTC, so we can look at the US session, see how the US is developing. Plus, we'll have a little chat about how these China drills are around Taiwan. It's affecting the market as well. So yeah, don't forget, I'll be going back online around about between 1:30 p.m. to 2 p.m. UTC. So please come and join me for that. On that note, if you're watching me on Facebook and you like this episode, follow us if you like. If you watch me on YouTube and you quite like this little episode, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and you found it useful, give me one of these. It's nice to know that you like what I do. Anyway, till next time. Like I always say, remember, these videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.